the markets. Today is a horrible day, right? And last time I checked, I will share my screen with you guys shortly. NASDAQ was down over 450 points. That's close to like 2.5%. And S&P 500 is down about equal amounts. So there is cyclical, historical values that we can look at. I mean, you know, I'm a technical trader, as I told you guys before, so patterns repeat themselves. But then for some reason, September, October happens to be the worst times for the markets, and it's proving it. We just walked into September and boom, this is what we face. But again, if you listen to me, you should have been ready for this. September is historically the worst month of the year for stocks. I agree. And there's the chart. Pictures are worth 1,000 words. Always look at pictures. If you don't understand it, take a screenshot of it, study it, talk amongst yourself. Seriously, these should be the topics. Kardashians should not be the topics on your dinner table, or somebody else's billions should not be the topic. It should be your money. It should be what you should do. It should be what you can do to prevent these pitfalls of the economy, and it's going to affect you. And then afterwards, if you don't do anything about it, you know, education is power. If you're not educated enough to understand this, listen to it. Listen to some people you trust and learn. Once you learn, then you know when they zig, you zag, and you know you're ready at least for what's coming, right? The S&P 500 has fallen 2.3% on average in September's over the last 10 years. Well, we're doing the 2.3, all of it today. Marking the only month with negative returns. So this is the average return, January through December, what the market does. You guys can see by the height of the bar what months are the strongest months. This is average of the last 10 years, and what months are the weakest month. And September happens to be the only down month. Every other month is up. So when I talk to you guys about dollar cost averaging, when do you dollar cost average? Well, September seems like a good time to do so. So since World War II, the average September return has been negative 0.8%. The volatility index, I talked about this. I warned you guys. It was at 12. It jumped to 60. The first crash happened. Now it's happening again. Watch the VIX. I said that to you, whoever was listening, a million times. Moreover, the volatility index has seen the average spike of 10% in September over the last 33 years. While it's spiking again today. Subsequently, in October and November, the S&P 500 has seen a 1.6% and a 3.8% positive return. Well, this year, we also have what? What do we have? If we have the elections, right? The election cycles are always reasonably good for the market. I don't know if it's going to matter that much this year because the market is pricing from a soft landing. We're pricing a recession now, and market's definitely not priced in for a recession. You know, Fed was trying to manage the soft landing, and you know, last time they did that, I think I was 3. So the odds of that is going to be pretty low. So September is a time you just digest. You practice the 3 Ps: patience, position, and planning. You figure out what you're supposed to do. There may be some bargains at the end, like today. Last time I looked, Nvidia was at 102. Nvidia drops to $90, $95. I'm a buyer of Nvidia for a trade or for long term. All I'm trying to explain to you guys is that September is a bad time, period. You know, you don't need to be a jockey. You don't need to trade back and forth, back and forth. Most likely you're going to blow your account, so just be patient. If the opportunity is given to you to buy the indexes for your dollar cost averaging process cheaper, boom, there you go. September's a good time to buy some assets, especially in stocks that you like. That you're going to get a pullback because when the market goes down 2.3%, the average stock goes down 5-6% because of their beta.